Hey, what's going on, everybody? Welcome to another episode of the Path to Profit podcast. If you're joining me for the first time, my name is Bobby, and this is the chart breakdown. We're going to be breaking down a viewer requested stock, Lattice Semiconductor, which is going to be reporting soon. So we'll be talking about what the company does, look at their fundamentals, and we'll take a deep dive into the chart to let you guys know what's going on over there. So without further ado, it's time for the chart breakdown. All right, as always, down in the description is the agenda and timestamps if you'd like to jump around. But first off, let's get started on what this company does. So Lattice Semiconductor makes software, semiconductor chips. Not software, semiconductor chips. But specifically, they make field programmable gate arrays, FPGAs. Now, you're probably going, what the hell is an FPGA? Basically, it is a chip that is not specifically designed for one product. And that chip has the ability to be configured to do different things within different applications. So the reason that this is beneficial to some companies is not every company needs to specifically design a chip to do something for one product. So we'll take, for example, a company like Apple. Their phone comes out. They're going to design a chip to specifically work as the CPU for that phone. But maybe there's another thing like, say, a television or another product where a company might not need to build a very specific chip to make that product function properly, and rather buy a FPGA where they could then program that chip to do what it needs to do. It makes it more cost effective. The turnaround times are a lot faster. And it's also great for prototyping because you then have the ability, if you're not exactly sure what you need this chip to do or how the best way to make this product work, having an FPGA that you can continually test and program before you figure out the end result of that product is very beneficial. So that's just a kind of very broad-based. I'm sure there's somebody who knows more about this is probably saying, well, I'm leaving out this or I'm missing this. I don't understand truly what an FPGA is. And you're 100% right. I know the bare bones, high-level basics, just so I kind of have an understanding of what this company does and why their products are selling. So let's jump over to MarketSmith. We'll look at the fundamentals. As we always do, we'll look at the composite rating first, 99, EPS rating, 99. Earnings are good. Earnings are consistently accelerating. You can see, just again, very consistent growth and acceleration in the earnings here. See fairly good acceleration within the annual. Estimates looking pretty good. You can see the sales increasing as well. You can see the number of funds increasing as well. I mean, let's just jump over real quick and look at the checklist. On my checklist, again, I should probably just remove this. EPS accelerated 3/4. It failed, but I mean, I think we all agree that's accelerating. But it's out of the top 40 industry groups. Semiconductors are number 66 out of the top 40. I think we all, if you watch the rapid review, subscribe to the channel, check that out. I post that every single week. But that's something we've been talking about, is just kind of rotation that we've been seeing within industry groups. So not the biggest concern there. Big thing though, again, earnings are coming out on Tuesday. So be conscious of that. It's a volatile period for this stock. But question that I got from the viewer was basically looking at this chart. What am I seeing? What's going on with this one? And here you have a cup with a handle. It's a stage 1 base. It's been 61 weeks, a long base, 49 depth, pretty big. Got that handle at 19% depth there. You can see the volume really dried up in that handle, which is awesome. That's exact textbook cup with handle. You want to see that volume dry up. You see the volume picked up as it got up on the right-hand side of the cup, starting to go up, which is a positive sign. So beautiful, beautiful chart. You can even see that as it broke out from this pivot at a 76.47 pivot point, the volume came in on a weekly, really, really positive. But this stock is definitely extended if you're looking at it on a weekly chart. Now, on a daily chart, again, it's extended. You see the same thing. This stock is past that pivot point. It's at a point right now where getting into this stock is going to create more risk for you, because you can much easier. It's much more easy to actually get stopped out of this. Like, if this stock could easily pull back to its 50-day, and now all of a sudden you're down 12% if you buy. And part of the chart analysis too is this is just how stocks tend to act, based on human nature. So look, don't buy extended. Be disciplined in your trading. This one is extended. Now, if the question is, I own this stock, I bought this stock on a breakout, what do? We're going into earnings. This question is a little tougher. It's a little based on everybody and how you go into earnings. One thing about earnings, just be consistent in how you approach it. If you're the type of person that never goes into earnings and you sell and you just take your profits and you wait and you say, if this goes on without me, I could always just buy it back at another opportunity. That's fine. If you're a person that hangs on to earnings, that's fine too. But I think the most important thing is you want to go into earnings with a cushion if you are going to stay in the stock during earnings. The stock could jump up 10%, could jump up 50%, but it could also reverse 10, 15% very easily or more. So for me personally, I like to have at least a 10% cushion in a stock before I decide to hold through earnings. And I also look at how the market's acting and also how my trading's been. If I'm maybe able to take on a little bit more risk because I've been doing fairly well at my trades, sure, I'll hold on to it if I have the cushion. If maybe my trades have been not as many winners and I've been lagging a little bit in the market, I might take my profits, or at least take some profits going into earnings, just lock in some gains, reduce some of our risk. So that's a big thing. Just remember, it's all about risk. I do currently own this stock, and I will definitely be trimming going into earnings. But yeah, that's where I'm at right now. If you have questions, please comment below. If I did not answer exactly what everything that you wanted to know about the stock, and I'll be glad to add on. So that's all we got for this week. Like I mentioned, top right-hand corner, that is the rapid review. We talk everything in the overall market trade for next week. Bottom right-hand, you got some more chart breakdowns. And then right there, subscribe, turn on notifications so you can get a notification when we do this every single week. That is all we got. See you guys next week. Stay disciplined.